First thing is we have this link here
Oh
that
yeah.
you all need to go to because Graham was going to share a little bit of a preview on his trade, but he is not going to be able to do that
Mhm.
officially, legally, until we get 250 thumbs up. So you guys got to hit that link. That's Graham's Telegram. That should link you directly to the post. Um, Graham's up about what 4 grand this week, going for more, and he was going to preview it today. But we need that 250 thumbs up, which I think is the biggest ask you've ever made on Telegram. 250.
Probably about 100. Yep.
So, uh, so you gotta go over that post. I just posted the link. I'll post it one more time. It's just that's a direct link to the post. You got to go over there and hammer that post. So we'll give you a couple minutes while we're doing that. Uh, we can um, we can cover something else that I want to mention today. Matt says, "Yeah, no participation trophies here, Matt.
Nope.
We gotta actually hit the number." So let me show you something I'm annoyed about this morning, real quick here. Uh, Let me show you. Oh, by the way, and Graham, and later, I don't know if you saw him, if you've been watching my Telegram, but I told folks I have a way to one up you today during the live session.
Oh boy.
So you'll find out about that later. It's it's a surprise. It's a surprise for you and for Graham that I've decided to try to one up him today. But here's something that I'm a little annoyed about. We had this VIX pop at the beginning of the week while the market was still in that range of pretty much at all time highs. And so I wanted to short the VIX, and I did by giving a VXX trade. Now, what you can see is this is not a big move here, but let's kind of run this out. So this is 1763 on the VIX, and we are now 1637. So let's just do the math. 1763 minus 16. Sorry, I'm trying to look at tape over my microphone at the same time. So we got a 126 drop. And if you divide that, by 1763, oh, I totally just did that backwards. 126 divided by 1763. Oh, there we go. We got a nice 7% drop on the VIX. Everyone see that? Got a nice 7% drop on the VIX, just like we predicted. However, the annoying thing is we traded it on VXX. So here's VXX, and we got that at 45.75, and we're at 45.20 right now. So before I pull it up on the calculator, you guys are probably
If anyone's watching, Nate did just freeze.
Okay.
It's not your connection.
Just doing
measuring
an internet test over here for me.
No, we're good, Nate froze.
it.
Okay.
45. Oh, my. Oh, I froze? Dude, I just reset my router. Did you guys miss my entire explanation?
Yeah,
Yeah.
you literally started it and it paused.
Oh, my goodness. I was really rolling there. Okay. Did you guys see when I showed you the VIX?
Oh no. Nate's gonna kill me because probably about a year ago his internet was freezing, so I told him a specific router to get, and now it's starting to fail on him. So
No, this is what he gets for trying to one up you.
that's
Listen,
true, yeah.
something is wrong on my router. I reset it this morning because it was doing this yesterday for the second half of the day, and now it's doing it again.
Time to short Netgear.
Seriously. By the way, it's because Graham sold me this Wi-Fi setup
That's
that
what
I
I just told
have.
him. Yep.
It's all his problem. Okay.
It's probably because you
Did
have
you?
47 kids watching Netflix at the same time. Oh no, I think he froze for that one too. Well, in other news, we're getting close to hitting that 250 number. We're at 231.
This is a practical joke they're playing on me right now with the internet. Like, are you kidding me? Did you see the part where I said VIX dropped 7%?
Uh, I did hear you say that.
Okay. Well, oh, I wanted to show this. It's really annoying to me because okay, we traded the VIX at 17. It's down 7% since we traded it, but we put the trade on the VXX and it's down like 1%. Well, Graham, looks like it's all you today. This is ridiculous.
Um, well, we're at 234 thumbs ups. We
Oh,
had
16,
73 on the
16
morning
more.
post, so maybe we'll just merge the two together and call it 300.
No, nope. You gotta get there. You gotta get
That's
there.
true.
Guys, go to the post. He needs 16 more. There it is, right there. Oh, well, I'd really like to explain this one more time, but I feel like I'm cursed and I can't explain it.
I'm very interested. I mean, you've got us all on the edge of our seats here.
Nate, turn off your video. That might fix it.
Well, no, it's
Sorry.
not my video. It's the actual internet is going down. Over, I can see it on the network.
Oh.
It's this junk internet that Graham sold me. You gotta,
Do you want me to get you a phone link in case you need to just use your phone?
I don't even know what that means. Oh, like a
Oh, like you dial in?
a
Yeah.
dial in. Oh, I thought you meant like a phone. Like you were gonna send me a dial-up phone link to my house.
You know what? It might be better than your internet, but yeah, I can send you a dial-in number if you want.
Okay. Well, let's see. I'll give it one more try. And if it doesn't work, then we know that you guys are not meant to hear about this thing with the VIX.
It's funny. It works amazing right now. The second you start going into it is when it
As
freezes.
soon as I start talking about the VIX. So on the July 14th pop, where the VIX, which you can see, VIX, where it was up at 1763, I thought it was overpriced because the market was still right at all-time highs. And so now it's at 1637. That's a 7% drop on the VIX. But we didn't trade the VIX directly. We traded the VXX because it's a more tradable asset. But if you look at the same time, the VXX only went down like 1% over the same time frame. So we traded VIX through VXX, but one went down 7% and one went down like 1.5%. So now I'm set up to lose my VXX trade, or at least like break even, because what's it at right now? I'm up 10%. I'm going to make like 10% on it instead of 100% on it because VXX underperformed dramatically. So that's what I'm annoyed about. And hopefully now you guys actually got through that entire point.
Yep, we got it.
Okay, whoo, we did it. We survived. Of course, next I wanted to actually bring up a slideshow and recap what we were going to do, but that seems like dangerous territory based on.
Yeah, that does sound pretty dangerous.
Maybe if things are smooth for the next couple of minutes and we get, we're 6 thumbs away. We are 6 thumbs away.
Yeah, 3 people leave a fire emoji. That's going to not help out.
Oh no, you got thumbs up, not fire.
Real quick here, let me just address this. I've got a lot of questions about my meta trade this week, which if you took it with me, I mean, this is what meta did this week. Let's see. 714, it's gone straight down. That happens. I hope I was very clear in my presentation on the dollar options that, hey, we don't need to win every trade. We've got 1-to-1 risk to reward. Stocks go up 70% of the time, give or take. That stacks up really nicely over the long haul. Sometimes they don't. Meta's been a great player for us, where we've been able to get winner after winner after winner on Meta. This week it didn't work out. So in this example here, I know I've got a lot of questions here. Just want to say this one's not going to work out. I'm going to lose my investment on it, but that's okay because I'm going to come back firing next week again, where all we need is a good stock to drift slightly higher to double our money. So hopefully that answers your questions there. I am in the trade myself, like I always am, but sometimes they don't work out, and that's okay. It's par for the course. If I won 100% of the time, I wouldn't be here right now. I'd be on an island in, I don't know, the Bahamas, maybe Hawaii, buy my own Hawaiian island. Nobody wins 100% of the time. We just play the odds and we do it over and over again. All right, now I'm just going to combine these emojis together. I got 247 thumbs up, 3 fires. Let's just call it a day here because now I'm going to show you a trade that has won 100%
Oh, wow,
of the
you're
time.
cheating the thumbs up. Cheating the thumbs up. All right, fair enough. You do have 50 total emojis, so I guess we can let it slide.
250, 250. Oh, there you go. John says the lawsuit against Facebook didn't help. Yeah. Either way, news or not, I'm just playing good stocks, betting that they're going to go slightly higher with the dollar options. Most of the time it works, sometimes it doesn't. And I'm okay with that because it makes a lot of money. So now, since we're almost there, we'll talk about a trade that didn't lose at all this week. Since we all want all winners. And right now, if you're curious, taking a look at my charts, it does look like we'll be trading to the downside today, just as a little extra teaser to the teaser. Telegram's at 249. Here you can see the post. Ask for 250, but we have 3 fire emojis here, so we'll count those for one more thumbs up. So let's get rolling. Let me ask you guys here in the chat, who here has been following along with the 60-minute income trade? Or at least paying attention to the post? Now, let me ask you this. Say no if you're not excited about this new trading method. Let me see if I get any no's.
You're up $4,000 this week, Graham?
Yep.
Nice.
And $5,000 if you count Friday. So for last 5 trades, up $5,000. Again, there's going to be winners. There's going to be losers. We're winning 86%, 87% of the time. Right there in that range, which is amazing because so far that's right in line with the back test. Normally, you back test something, you trade it live, and you want it to line up. Doesn't always happen. This one's lining up perfectly, which is awesome. So
let me ask another question. We've got a lot of yeses there. Give me a yes in the chat if you think every time Graham makes $4,000, he should just Venmo it to me. Let's get some yeses in the chat for that as well.
no. Hey, we got one no.
You got one no. But
Yeah,
no, it is
me.
yeah, good. A lot of Venmo requests. No, but it is pretty cool. I mean, something that can stack up as quickly as you've done over the last week is it's pretty fun to watch. I've been seeing the signals. What do you think you have today? A sideline or a potential short?
We got puts.
Oh, okay.
Which I will say, opening range was tight today. Not a lot of movement this morning. But hey, I'm just following the system, knowing that it's worked out 86, 87% of the time. That doesn't mean it works out 100% of the time. But when we stack it up, I'll just take you guys through all the results because winners and losers combined, this thing is a monster. And there's a reason I'm investing $2,000 each day into this. I don't have to do that. You can start with as little as 50. I'm so confident in this. I'm currently putting in $2,000 every morning in this strategy to give you an idea. And I might bump it up here. So right now we're on a hot streak. We got 5 in a row. If you've been in the Telegram, you've seen me posting about this. You saw we had a loser last week. That happens. But right now we are cooking. Here's the last 5 trades, tallying it all up. If you started with $1,000, you'd be up $2,500 over the week. If you start with $5,000, and that's not 1,000 into 2,500, that's 1,000 producing 2,500 in profit. So 3,500 total balance. $5,000 producing 12,500 in profit. Now I'll show you all of the stats and everything you need to know here in just a moment. But first, let me kind of give you a teaser here on how it all started, how it's developing, how it's going right now. So it's all based on an opening candle continuation. And you may have heard of this before or something similar, opening range breakouts, opening range price action. It's really one of the most accurate predictors of market direction. So we saw that on days where the opening candle, and this was based on a 30-minute candle, the days that the opening candle is green, get this, market closed higher 75% of the time. So very, very, very simple, basic information for you here. If the opening 30 minutes is green, there's a good chance that the markets are going higher that day. Might be something you want to just put in your notepad and probably applies to all of your other trades or short-term trades that you got going on. On days where the market opened red in the first 30 minutes, it closed lower almost 70% of the time, 64% of the time, and this was over the last year. And in most cases, I need to update this because it says this is backwards dates. This was for the last year. But in most cases, you can pick almost any random day and see exactly what I'm talking about. So April 21st, opening candle red, What happened? Market closed lower. May 19th, opening candle green. What happened? Market closed higher. June 16th. What is that? That is green. Market closed higher. So we began testing this out to confirm the data, make sure it wasn't just a one-off random thing. And we did confirm that. However, as you guys know, the short-dated options have aggressive time decay, and that eats out our profits in a big way and can really rip an account unless we get a huge move. But then here was a little fun, important note for you guys. I quickly noticed something quite remarkable. The 60 minutes following the open candle typically give us the most powerful results. That's where almost all of the continuation happens. So again, let's look at the charts here. Opening candle red. We know that that means there's a better than not chance that the markets are going to go lower that day. But let's look at what happens in the first 60 minutes. First 60 minutes, down, 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 down. That's that continuation, that follow through pattern. Sometimes it goes 90 minutes, an hour and 20 or 120 minutes, which is 2 hours. But we see that continuation at the open. And then here in this example, the rest of the day kind of chopped around, finished flat from there, still down on the day, but not much action from there. The same thing to the upside. That opening 60 minutes, before lunch is where we get that continuation. You can see it here, opening candle green. Next 60 minutes, up, and away. And the rest of the day kind of pitter-pattered along. Doesn't really matter because the continuation all happened in the morning, right there in the first 60 minutes following our opening candles. So you see if the opening candle is green, we almost always see a strong buying response from institutions. And as you expect, this buying can carry the market higher and higher in the short term. Same thing is true for the red candle, just to the downside. Can create a selling response, driving the market lower and lower all before noon. So we began testing it with options Omega, which Nate was so gracious to walk us through that one briefly yesterday. That was an awesome session, Nate. Really eye-opening. I hope some of you guys are able to start doing, some of that testing and stuff. It's always really cool to see other people's takes. But here it is on SPX, which is S&P 500. It's options only, no risk of assignment, nothing like that. Since 2013, that's since the inception of this ticker. By using our rules, you can see here, let's take a look, 86.6% win rate over the last 13 years, 13 years since the inception. 86% win rate, insane account growth. This was only allocating 15% of the portfolio, so not even that aggressive. That's 1,408% account growth. And that's really impressive stuff. But for us, it really doesn't matter if the opening candle is red or green, right? I said green means it goes higher, red means it goes lower. We're able to structure the trade where either scenario would give us a chance at our 60-minute income trade. For example, June 12th, in this case, opening candle, what color was it? Anyone know? Green. As expected, it helped create a buying response and the market went higher. That's that opening range continuation. So as long as you had your trade set up, and I do all the trade picking, I've been sharing some in Telegram, some here, and now it's in the private members only Telegram where the all access members got early access to it. In this example here, bam, $500 based on $1,000 stake here, hit in 60 minutes. Now notice what happened next. Market didn't crash, didn't really go higher, just went flat, which is not a big problem, not a big deal because we're already out of the trade because most of the continuation happens following the opening candle. In fact, we found that we could significantly increase the win rate by targeting the 60 minutes after the opening candle. So instead of going for that 75% win rate, like the data showed, green candle up 75% of the time, we took it from 75% to 86, 87% range on the testing. I think right now it's 86.2 or 3%. So let's go look at another example here. June 16th, big green candle. We expect the markets to go higher. And really, more importantly, we expect that to happen here in the first 60 minutes of the day. That's what happened. Bam, profit target hit in 40 minutes there. Love a quick one. And obviously, that's a great return. We love those nice returns. But if you look at what happened after, market fizzled, went down slightly from here. But again, that did not matter to us because we only care about this opening range most of the time. And that's what the 60-minute income plan is all about. Not swinging for the fences, not chasing home runs. We're not even looking for big market moves. Nate, I think yesterday's on our one we hit, we entered the trade and we needed a 0.15% move in the S&P to hit our target. That's not 1.5%, that's a 0.15% to hit our target. So we're simply just structuring the trade where a few ticks in either direction should be good enough to produce a successful outcome. So let's look at another one here. Green candle, buyer stepped in, market ticked higher. We had our entry alert, and here $500 in just a few minutes that morning. And we're out. We're out of the trade. It's set up with an auto target where once you're filled, you set the auto target, you close your account if you want to, walk away, and at any point, if you hit that target, bam, your exit out of the trade. Doesn't matter what happens the rest of the day. In this instance, rest of the day, market sold off. But that didn't matter because with the auto target that takes our win rate from 75% to 86, 87%, we're out with a profit on the sidelines. And so anyone who hung on here would have lost money. But with our auto target, we hit and we were done for the day. Nate, kind of like what you showed yesterday when we were testing those different auto targets. And this one here, we're using a 50% auto target on the 0 DTEs. But you guys saw yesterday firsthand how much your win rate can increase, how much your profit can increase by using these. Now remember, we don't really care where the market closes. It could go to the moon, it could burn to the ground. We only care about that opening morning breakout. Now, of course, sometimes it could take a little longer to hit our targets, so don't freak out if noon rolls around and we haven't hit yet. I've had many profitable trades that I've shared with you in Telegram that took a little bit longer to hit. They eventually did hit because the odds are on our side. But normally it's happening before noon. Actually, yesterday I shared in Telegram, it happened at like 11:58 a.m. So 2 minutes before noon, right on time for lunch. Now, the key is how to structure the trade. So let me give you a basic understanding. Again, I'm not going to give it all away here. We're going to do that Sunday night. I'll post a link to join the free session here in just a moment so we can get all fired up and ready to rock and roll for next week. But let me give you a basic understanding. So I've built an indicator that gives us our signal. What it does is it looks at the 5-minute candles on the SPY, XSP, and SPX. Those are our main S&P indexes. I just have it for all three because some people like trading SPY, some people like trading XSP, others like trading SPX. Now, no, it doesn't show on any other time frame, specifically 5-minute candles. And each morning, you can see here, tracks the high and low price of the first 15 minutes of the day. It's that opening range we want to see. So we want to see the high price and the low price in the first 15 minutes of the day, 9:30 to 9:45 a.m. Eastern. Then we just simply wait for the 5-minute candle to close either above that price range or below it. And close is an important word. I don't really like jumping in early because you'll see sometimes it'll go run way up and come right back down. We want to see that 5-minute candle close outside of that range. So in this example, once the S&P 500 closed above that range, we got our entry. See it there on the chart, buy calls. In this case, we're long the call options, trading for that continuation pattern higher. And when it all works out like it did here, hit our profit target before lunch rolls around. This was about what? Let's see, a 90-minute income trade there, worth $500 if you invest 1,000, worth $1,000 if you invest $2,000 like I do each morning. And it works the same way to the downside. Again, opening range, first 15 minutes of the day, very important. You can see I've got some extra pieces in here that give us a little bit better win rate, but the basics is just all about the opening 15-minute range, high and low. Wait for a 5-minute candle to close above or below. In this case, closed below, buy puts. And in this one, we hit the trade in about 47 minutes for a 50% ROI to the downside. So hopefully this makes sense so far. Does this make sense for everyone?
Makes sense to me, Graham.
And Jason says he just closed for a profit. Jason, I've been sharing his post in Telegram. He's been all over this thing. And wow, the markets are sinking.
Oh yeah, you're probably getting close already.
So let me just show you here before I keep moving forward. Again, I said this morning we were short. What did my indicator tell me? Buy puts, buy puts, buy puts. What's happened next? Puts are winning, winning, winning. Jason, you beat me to the target. I haven't hit my target yet, but I'm in it to win it today. So hopefully you guys can start to see the power of this and just how good it's been. But a couple of pointers that I do want to make before moving forward. Number one, let the 15-minute opening range develop. Don't enter at 10 minutes into the open thinking, oh man, it's going this one way or it's going this other. We've seen a lot of times where we'll get a big first 2 minutes of the day, and then the next 13 minutes of the day it coughs up all the gains. So let that first 15 minutes develop. Let that range set up before taking your trades. Now, Once it's developed, this is what I'm doing for the All Access members right now, and we'll be doing for folks starting on Monday morning. Again, that class is going to be Sunday night. If you want to take it with me Monday morning, well, what I do is I send once that range is developed. So in this instance here, once this range set up, I sent both the put options and the call options. And then let me actually just walk you guys through it here. This is kind of how it looks. Market analysis at the open. Once the opening range sets up, you can see here I give you both the potential bullish options and the potential bearish options, right? The 15-minute range is set. Now we're just waiting for a close above or below. But for option selection, we don't have to wait. We know our entry points, so we can have these on deck ready to roll. And once we get that entry signal where we do close, in this case, above the range, I follow up with, all right, bullish breakout. We're doing the calls here. Here's how to enter them. Give you the fill prices, everything you need to know as well. Now, keep in mind, we do not trade both directions. I give you both in the pre-market or in the pre-range breakout game plan so that you have both ready to roll as soon as we get that confirmation to the upside or downside. And then pointer number 3, you want to wait for that 5-minute candle to close before jumping in. You don't want to just see it kick above for a second, then come back. That'll give you a false signal. Wait for the candle to close. Let's see. Is this a scalping technique? Ron, I wouldn't call this a scalping technique. Scalping is normally going for like pennies. You're getting 2, 3, 6% returns. We're going for 50% returns here just on a morning breakout continuation pattern. How do you get around the pattern day trading rule? That's a great question. If you have under 25,000 in your account, a couple of things you can do. Number one, actually, I'll share this with you guys this week. Number one thing you can do is you can set an auto target for a few of the trades and then let the others go until the end of the day. And funny enough, Nate, I did test that, what it looks like to not exit early and just hold it through expiration, which is it's 0 DT, so hold it till 4 p.m. First off, that doesn't count against your day trading rule. And second off, the profitability was the exact same. I think down
Yeah,
to
it
like
makes sense
1,000.
on a shorter window like that, especially with that stat you shared,
Yeah.
versus if you have time. Let me show you a absolutely crazy one. By the way, if you're using more time, you can finish, but I'll just if you guys hang on tight, I'll show you a crazy example of when you do have more time. So you're not doing like a quick trade like Graham. How that target can just blow your mind.
Yeah. So number one, you can let it expire. Profitability was the exact same over the haul. You actually get a little bit bigger winners. Your win rate goes down to 78%, but your winners are bigger. Secondarily, what you could do, and this is what like Rodney does, is he has 2 accounts. He has a Robinhood account and a Thinkorswim account. Uses 2 up in the Robinhood and uses the other 3 in Thinkorswim.
And by the way, if you do Thinkorswim, it's so easy. Set up one account and then you can like nickname your accounts like I do. You can nickname an account Monday, a nickname an account Tuesday, nickname an account, and then you just like go to your Monday and you just have it as sub account. So instead of having a $6,000 account, you have, 3 $1,500 accounts. That wouldn't even be the right math. 3 $2,000 accounts. It makes it super easy because they can all be right in the same Thinkorswim platform. So that's a super easy way to do it.
Yeah, and then it makes it really easy for you guys there. And then also, I mean, I don't trade futures. I don't give signals on futures, but some people like doing futures, and that's another way to avoid the rule. But there's many ways to get around the pattern day trading rule. I think that is one of the dumbest rules in all finance, personally.
It's ridiculous.
I think it just handicaps people that you don't want to, hold back. But hey, I got no saying it. But those are some ways around it. Of course, I will cover all the different ways around it in the trainings as well. So again, for a little inside baseball, the Telegram alerts look like this. At the morning market open, just a quick market analysis. Here's what's going on today, some news, what we're seeing internally. At 9:45 a.m., we get that range set where we know the high price we have to break, the low price we'd have to break. You also get the options that are on deck in advance. Again, this isn't the entry signal. This is just the prep for the entry signal. And then once we get that close above or below, bam, I post it in there. Hey, we're breaking out today. We're taking the calls. Here's what to do. Then I give you the fill prices, get till canceled, exit prices where we just set it and forget it. And then, of course, I love sharing when we hit. So I'll post right away once I hear my Thinkorswim account go bling, meaning I made my $1,000 for the day, which has happened 5 days in a row. Pretty awesome. And it looks so far, we're really close. I'm really close to the target today. Jason already hit his really close to mine. So hopefully I'll hear that deleting while we're on here as well. Now you may have realized, or you may have noticed that I show both SPY and XSP here, two different tickers. We're not trading both, but I do want to monitor both because both trade very similarly. They're both supposed to track the S&P 500. However, there are some slight pricing discrepancies with both where one may show an entry signal and the other one won't. So before ever placing a trade, I want both to agree. I don't want just the XSP to say yes and the SPY to say no. I want both to agree. Now, if you're curious, there have been 4 instances this year where they did not agree. So one said long and the other said on the sideline, or vice versa. 3 of those 4 signals were losers. That's why it's so important that we wait for double confirmation for both to agree. So for example, here, June 26th, you can see the XSP gave us a buy put signal here in the morning. But if you look over here, do you see buy puts anywhere? Does anyone see that on the SPY? Answer is no. They did not both agree, so we would not have taken that. We would instead waited for them both to agree, which they did here, about 15 minutes later with the buy call signal. And sure enough, what happened? Call options won that day. So I hope that makes sense. That's why I want to see SPY and XP. Just a small pricing mismatch there that can sometimes, well, it's only happened 4 times this year, but sometimes give a signal here that didn't happen on the SPY or vice versa. So that's why we want to see both agree, and then we're golden. Why do I like trading the XSP and SPX and not the SPY? Well, here's just a little cheat sheet for you guys. They all generally do the same thing. They all have 0 DTE. They all have very liquid options. SPY is not a cash close. So if it expires in between your 2 strikes, you will be assigned shares. But XSP, SPX, which I'm trading, there's no risk of assignment. It's cash close. Also, XSP and SPX are tax advantage where you get the 60-40 tax rule, which saves you some money on capital gains. You get 60% long-term capital gains, 40% short-term. Saves you some money there in taxes. And the average entry cost is very affordable for all of them. The reason I like trading SPX is because I can just trade, I can trade 8 contracts here to get to $2,000 versus XSP. I'd have to trade, what is that, 40 contracts to get to $2,000. So I can save some money on commission. So that's why I would do SPX over XSP, depending on how many contracts you would want to go with. But the biggest advantage of XSP and SPX is no risk of early assignment. So if you're worried about getting clobbered with 100 shares of SPY at the end of the day, that's not a big fear for us. So right now, over the last 6 months, we're hitting with an 86.2% win rate. And here's something fun for you guys to know. We don't even need to be that profitable to make money. With the risk to reward we currently have set, we only need to win 2 out of every 3 trades to make money. So right now we're hitting with 86% win rate, but let's say that the thing really hits, a bad rough period and we only win 70% of the time. Well, after a full year of trades, if you start with 1K, only winning 70% of the time, you end up making 10 grand. So our win rate in this instance dropped massively and we still ended up with a profit. What if it dropped to 75%? We make $25,000 that year. What if it drops from 86% to 80%? We make $40,000. So I hope you guys can see here the odds are so stinking good on this thing that even if our win rate doesn't hold up, which I wouldn't expect to happen, but even if it doesn't, we are going to be absolutely killing it. And here's how we're currently looking after yesterday's winner: 86.2% win rate, 31% average daily return. That is winners and losers combined on an average basis. So this is like the real return every single day. That's like 3 years of S&P 500 returns every single morning. It's nuts. Now, obviously, if you have $100,000 in the S&P, don't throw $100,000 in on this unless you want to. That's up to you, but I would not say, it's not even one-to-one apples here. But the fact that we're getting 31% every single day is insane. Based on 5K, no compounding since February 18th, I believe, up $149,000 in profit. That's insane. Keep in mind, you don't need to start with that much. I don't even trade that much right now. If you want to start targeting $500 a day like Josiah, if you've been following along like Josiah's been doing, he started with $1,000. Minimum investment, $50 per trade. I do $2,000 a day. Do what you're comfortable with. You can always scale it up over time. So if you started at $1,000 a day, which really isn't that much of an ask, since February 18th, so it's been 6 months, or is that 5 months? March, April, May, June, July, 5 months, up $29,000 in profit. That's including losers and winners. 1K per day, up almost $30,000. I don't know where else you can get that kind of number. If you do that for a full year, that's on pace for about $63,000 in profit by the end of the year, based on $1,000 not compounded. Again, I don't know where else you can get those kind of numbers. And we're hitting right in line with the 12-year back test. This was amazing to me to see. The back test at 86, 87% win rate, and we've been hitting at 86, 87% win rate over the last 5 months. So it's absolutely amazing. I'm super, super excited for it. My favorite part, we get up to 5 shots each week. Every single morning, we get that opening range, and then we just wait for a break above or below. It's normally 4 or 5 mornings out of the week, so we get plenty of opportunities. If you miss one, no sweat. There's tons of opportunity here, tons of meat on this bone, tons of action for you guys. And of course, it all goes down this coming Sunday night. I just posted the link in the chat. If you guys aren't signed up, I don't even know what time it is.
7 p.m., I hope, because that's what I have in my calendar.
Yeah, I believe it's 7 p.m.
All right. Well, hopefully every single person is there for 7 p.m. All right. Am I good? Are you still rolling?
That was my quick spiel. It was 152 slides I put together this morning.
Yeah, your quick 5-minute intro was 150 slides, but that's awesome. You gave a lot more depth than I thought. And I think one of the coolest things there, let me share my screen real quick because I want to get through this real quick, this summary real quick. One of the coolest things there, someone asked like, hey, are you scalping? Because there's such short moves, such quick moves. And the answer is, well, no, we're getting 50% winners. We're not getting little scalping wins. We're getting 50% average winners, which is amazing for some of the small moves. By the way, a couple people mentioned they didn't get filled on overnight options. Should have filled easily. If you guys have the July 18th expiration, even Joseph got filled, and he's on Robinhood, which no offense, Joseph, but Robinhood's almost always the last to fill. So if you got filled, everyone should get filled. Some people mentioned they didn't get filled. I would make sure you have the July 18th expiration because the mid price was all the way up like into 91 cents. I got filled, 20 minutes earlier than Joseph, as often happens with Robinhood. So if you didn't, I would definitely give them a call and see if they have some explanation for that. I mean, you're probably still in pretty decent shape, even if you didn't get filled yet, to get filled. But at the same time, I would maybe give them a call because, like I said, if Joseph got filled, everyone should have got filled. Okay, let me quickly give you a recap of what we talked about yesterday with the whole window idea. So this idea is, okay, you have a window of a trade. If you're trading any kind of option or spread specifically, you have an entry, you have an expiration date, that's kind of our yellow line, and then you have a window in between. And so the question was, do you think your odds are higher of picking where the stock's going to end right here at the expiration date, or that somewhere in the window it's going to move up, right? Well, if you answered the chat like yesterday, everyone said, of course, it's easier to predict that somewhere in that window it is going to go up, right? Because you're going to get a pop more likely somewhere. It's actually similar to what Graham just kind of explained with what he's doing. And so I'll actually prove that to you. I did an even crazier. One that I found yesterday. But again, most stocks move kind of like this, right? They don't move in a straight line. So if you enter a trade here and you have a line the same where you need the stock to go above, just like how Graham and I typically trade, if it expires here, you win. If it expires down there, you lose. Here, you win, and so on and so forth, kind of back and forth, just depending. Now, my point being that predicting where a stock is going to finish can be really tough. And that GTC limit, the target, changes up the scenario completely. Instead of needing to pick which candle is going to finish where, we just lay a blanket of profitability over the chart so that anytime the price hits that range during the window of the trade, we can exit with a win. Now, I won't go through the entire scenario because I did this yesterday, and this is just a quick recap. But a couple days ago, I put on my overnight option trade that was looking for a long. I put the line in the sand here, which meant that at the end of the day yesterday, I needed the market to go above that line. Then the market started going down, and Graham actually got his 60-minute income that he was just describing to the downside on the same expiration date. So he was going below that line in the sand while I was going above that line in the sand at the same expiration, which, like I said, I'm not a rocket scientist, but I know price can't finish both above that line and below Graham's line on the same day. But the key was that we both used target. So when Powell news came out, this was 2 days ago, Graham hit his target right there, made his full trade. And then when the market popped back up, I hit my target on overnight options. So we both, going in separate directions, hit our target on the same expiration date, which is just insane. And by the way, guys, I'm moving very quickly. If you want a much more detailed analysis of what's happening, just watch yesterday's recording if you missed yesterday, because I went through it a lot slower. But the key was we traded in opposite directions with opposed lines in the sand, same expiration date, and somehow we both won. And that's really the power of that target. And in Graham's case, he turned what would have been a losing trade. If he just let it alone, it would have expired above his line in the sand. But by using a target, he flipped that losing trade into a juicy profit. Now, let me show you something I found. Graham, this is going to blow your mind. Because yesterday, I just in real time found a couple examples and then ran the target. I spent a little more time, not a lot of time, by the way, just a couple random tests to try to give a better example of a target. All right. Keep an eye on these numbers, guys. This is the SPY from July 2015 to July 2025. This is 10 years of data, trading a debit spread, and letting it expire over the next 60 days above that line in the sand, which if you give the SPY 60 days, it's usually going to go up, right? As a matter of fact, 63% of the time over the next 60 days, it finished up. What I did was I ramped up the amount of trades. You can see 2,500 trades here because I'm doing it where every day we just enter a new trade with about 60 days of expiration. Okay, so keep an eye on these numbers. 10,000 into 19,000, 63%. I mean, I'll just kind of post them in there for you in that format. And you can see max drawdown. You can see all that stuff, right? Now, what I'm going to do is I'm going to go and update this. Again, we're just trading 60 days out, buying and selling a debit spread. But now I'm doing it every day, Monday through Friday, just stacking on a trade. And right now there's no target. It's just letting it expire. What I'm going to do is I'm going to put a 25% target on the trade so that over the course of that 60 days, at any time, if it pops, it takes me out with a profit and I get out of the trade. Now, I just showed you the numbers, 10 into 19,000, 63% win rate, all that kind of stuff. Now, I'm going to run this with a 25% target. Now, this is going to take a while because there's 2,500 trades. So I'll flip back to it in a second. The first thing I need to do, though, I need to tell you about my, while we're waiting for that, I need to tell you about my one-up of Graham here because I promised a surprise and I want to deliver. Okay, so yesterday, I shared this calculator with you guys. I said, look how nice I am. I built this calculator for you to help you with your good till cancel orders so that you can plug in your trade information. It'll spit out a 25% target, 50-cent target, all that kind of stuff. And Graham was very mean and he bullied me. And he said that target or that calculator is really ugly. And we can't give that to people in the Opening Playbook VIP. We need to give them a better calculator. And so Graham built this calculator, which I agree is much prettier. Same inputs, but he added this custom target area and it looks nicer and it has some notes.
Your screen there just a little bit, just so everyone can see how much better that looks.
Okay, sorry. Yeah, here you go. Is that better? Now you can really see how much better
oh, there we go. Here we go.
Graham's calculator is. Okay, so I'm sure you all agree that Graham's calculator is nicer than mine, but then I got mad and I said, I got to do something. And so what I did is I built a new calculator. I built 3.0 just because I wanted, we're always trying to give our Opening Playbook VIP people the best of the best. So I went ahead and I built this for you guys. This is the new web-based GTC target calculator that I built. And so what it does is you can put your information here, like bought the 220, sold the 225, enter all the same inputs, and it's going to give it to you in this really nice format with all the stuff. And it does some really cool things. Like, for example, if I do a spread that's $5 wide, like it tells me here, and I say, okay, but I paid $4 for that spread, it's going to automatically tell me down here, hey, that's not available because your target would be wider than the spread. So it gives them really nice information. Also, it has this custom, okay, I want to target 15% on this, automatically updates your custom target for you. And as soon as you put this, over the amount, it's going to tell you, hey, your custom target is not available because it would be too wide. And you could do this, you could take our automated options where we might have like a 565 and a 566, and then our entry price is going to be something like 0.70, and it's going to say, hey, it's the spread is $1, your max spread value is 500, your net profit, and then I could put a custom target in here of like 18%, which is kind of typical, and it would tell me right there, you're going to put an 83 cent, or you could do like a wrap where like Graham might like to do, where you take Meta, which maybe sore subject on Meta right now, but we'll use it anyway. 800 and 810, and you're usually going to pay right around $5 for that. And so if you let it expire, it's going to be, your max profit, $2,500 for every 2,500 risk. That's your letting it expire. But maybe you actually want to throw on a 75. Well, that's already done for you. So let's say you want to throw on an 80% target. It'll give you a custom number right there. So I built this for you because I couldn't let Graham have the last word on the calculators, and we are going to get this published and updated for the Opening Playbook VIP members. Now, I hope you guys could agree that this calculator alone is worth the $1 that we charge for lifetime access to VIP. But if it's not worth $1, you get 30 other things that are worth $1. So, either way. Okay, now let's flip back. Does everyone remember the numbers? Just guys, all I want you to do is post in the chat. Nate's calculator is better than Graham's. No, I'm just kidding. Does everyone remember?
I feel robbed. It looks like you took my spreadsheet I made and built into this thing.
What? I would never do that. I definitely didn't put together using AI, say, hey, use this spreadsheet and recreate a better interactive application. I would never do that. But if you guys remember the $10,000 to $19,000 over the 10 years with 60 days to trade every day, here is what it looks like. Bada bing, bada bing, when you do a target. And I'll just let that hang in the air right there on the same entry with everything the same. The only difference we did was add a target. We just took our win rate up. We just went from 10 to 19,000 to 10 to $10 million. And that, my friends, is the power of a target. Now, like Graham said, on a one-day trade, the target's not going to make a substantial difference because you're basically going to trade off your win rate for your increased profit. So on 60-minute income, you could let it expire. You're going to end up with about the same net, CAGR, and all that kind of stuff. But here, because you have 60 days, that window is very wide looking for a pop. It makes an incredible difference in the overall potential of that trade. So, by the way, drawdown's lower, even though you have $10 million of capital now. Just crazy numbers there. So this is why I love the targets. This is why I love using that in that window every single time we can do it. Yeah, there will typically be not daily, no, because the daily will typically only go out 30 days or so, and then you'll use the weekly ones from there. But anyway, I just wanted to give you an even crazier example of how that target can impact you, especially when the window is wider. And that's why I use it in most of my strategies. So we'll dive more into the nuance of how some of this works because the window matters, how much cushion on the trade matters, how aggressive you're being on the trade matters, all that stuff matters. But I think it's one of the more powerful things in all of trading is being able to use that target. And that's what I like. So are we going to do, I think we're going to do a weekend option opportunity here for anyone who missed out. Greg, do you have anything else on your agenda that we should cover?
No, nothing in particular on my agenda, but I know that the thought, I told you guys, the thought of winning 100% of the time is impossible, but I guess I must, take the humility route here, Nate, with you, since you currently are doing that with the weekend options.
Well, I think it's a dangerous game to talk about how I'm maintaining the 100% win rate because I'm going to have to eat that sand at some point here. But I do think of all the things we look at, this is my very biased opinion. Of all the things we look at, all the cager stats we run and the profit factor and this, that, and the other thing, maybe the craziest thing that we have going in 2025 is that weekend options hasn't lost a trade in the year 2025.
Yeah, that is crazy.
With, Liberation Day and and everything else. 2025 has been about as hectic as possible, and yet weekend options has yet to lose a single trade, and we'll have one here in a couple hours, and we'll use that same kind of target concept as well. Now, just to be clear, I don't think weekend options are going to go the rest of 2025 without a loser. I mean, I just want to be very, very clear on that. I just think it's incredible that it's done such a good job of kind of stacking the advantage enough that even in some of the craziest markets we've seen, it's maintained that 100% win rate. So, I mean, we're going to go for as high win rate as possible. Our data shows about a 95% win rate over a longer stretch of time, but I'll take 100% in 2025. So,
he says, let the loser day be the one that he can't get into the trade.
Yeah. That's always nice when it's the one that you accidentally avoid that ends up being the loser. But anyway, so if you guys want to go with me here to try to keep that perfect win streak alive, we'll have our, it's Friday, so we'll have our weekend opportunity here in just a couple of hours. And we'll go ahead, we'll play that presentation for you. This is from just a couple weeks ago when we still had 100% win rate, but now you can add a couple wins to that